So please join me in welcoming Sharad Khare and Jessi Johnson to the stage.
Merci. Okay. Hi, everybody. How's everyone doing this afternoon? It's Sunday. People are gathering. Welcome. Jessi, welcome to the stage.
Thanks for having me here.
Yeah, so I thought today we'd do something a little different. Rather than having Jessi speak at everyone, I thought we would conduct an interview. I think a lot of people are online looking up a lot of the questions that we're going to get answered today. And I thought if we do a Q&A, find out a little bit about Jessi, his experiences, and current information about the market. So that whole idea of people thinking about what they know, what they might know, we're going to get it all from Jessi today. I've got a list of questions. Jessi, what are we going to talk about today? What are we going to do today? Yeah.
Well, this is more of like a one-on-one intimate setting where if any one of you are sitting on the couch just asking me the questions that are most important to you. I've done this presentation for many years, but in the past it was more of like a data dump where I'm basically showing you 70 slides of raw data. And yes, granted, it's all very important to have. Yeah. I'd rather focus on the key points and then give you direction to my website where you can download the full thing if you so choose.
Okay, great. So what we're going to do, the format will be, we'll have a great dialogue here on stage, and then I'm going to open it up to questions as people gather in and thoughts that you have. And this is a good time, if you have your PDAs or your phones, take some notes down and refer to some of the stuff we're going to talk about. So let's get right into it. How did you get into this business? When did you start?
Yeah, starting at the age of 6. It was funny. My mom was here the other day, so I had to be very careful what I actually said when I told this story.
We always have to be very careful when our parents are around about what we
do. She was actually late. I couldn't believe it. But yeah, so I started at the age of 6. I grew up in a pretty nice neighborhood. My parents didn't really have much money, so I wanted this one particular pair of probably Nike sneakers and couldn't afford it. So I took it upon myself to raise the money. And what I did is I went in my mom's fridge, my parents' fridge, and I found items that were unopened. And I literally stuck them in a red wagon, my little sister, who was like 4 at the time, and rolled it around and sold it to the neighbors. And this went on for about a month. And lo and behold, I got my shoes and a lot of other stuff until my operations were shut down. So it was pretty funny.
So parental product theft got you into this business?
No.
Tell me about that.
It got me the inspiration of how to get money. But I started at a first home buyer seminar like this, learned what a broker does, thought it was pretty cool that you can provide this service that it's very hard to find. There's a real lack of education in this industry, and that's what I'm kind of here to do. I'm going to share a few stories of stuff that happened to me that you're going to shake your head at, being the broker. He's not supposed to go through these first home buyer issues, but I have. It's funny, when I got into real estate about 9 years ago, I learned very quickly that I had to grow facial hair and sell my lowrider. So
it's good to have hair, actually. Lucky you. Lucky you. Yeah.
For now.
Yeah, for now.
For now.
Yeah. Now tell me something. When I think of a mortgage broker, real estate agent, I put him in this category of things that I don't know about. Is there a fee for your work? How does that work?
No, and if your mortgage broker is trying to charge you a fee, we recommend getting a new broker.
Okay, so that is. So how do you get paid?
Yeah, the lender pays us a small percentage of the mortgage. It's kind of like, instead of paying for advertising online or whatnot, print media, they come to us and they gave us a small percentage of the mortgage as a way of saying, thank you for generating the business. So it's pretty sweet. I'm free.
Okay, let's talk about the subject. What is this process of first-time home buying?
This is probably, I guess, the longest question to answer of everything, so I'll try to abbreviate as best I can.
Great.
Essentially, you want to first start out, with doing your research aspect of it. Go online. We've got a free first home buyer seminar, very in-depth, more in-depth than this. And you want to do your research, get a really good idea of what you're looking to do first. Is this something you're ready for? Don't get into it too early because everyone says you got to buy a house. It's a good idea to start with a broker, but interview a few, because there's a lot of brokers out there. And to be honest, getting you a good rate and a good product is really not that hard. It's more importantly what they do in addition to that, the extra service, how long they've been around for. So once you figure out a broker, then it kind of goes from there. So you're going to go do your pre-qualification process. A lot of people just, they'll go to a bank and the bank says, yeah, you're qualified for $500,000.
Sure.
Go shop. That's not qualification. What you really want to do is make sure credit is thoroughly verified. If there's a problem, fix it now. Not when you're trying to remove your subjects on the deal.
Yeah.
have them look at your documents. It's shocking how many brokers don't even look at the documents. Well, very often there's problems. There's missing documents. It's a family company who owns a job letter, whatever. You need to fix that early. So I'm kind of going a little further than I should on this, but you get qualified, get a rate hold. It locks in a rate for 120 days. It's free. It doesn't cost any money. That gives you time to shop. If the rates go up, you get the lower rate. If they go down, you get the lower rate. Yeah. When you're ready to shop, it's recommended to go to your broker and get a realtor. You might have someone you know. I'll tell you a horror story. I got a few for you, but that happened to me when I bought my first home. Get into that in a bit. But do your research on your realtor as well. This is really, really important. A lot of people don't take the time to go through this and select the right person. Again, the broker can recommend someone they've been working for a long time. You do your home shopping, you write your offer, you go into the most important stage of the entire process, where you have to remove your subjects. Once that happens, you have to have your appraisal and inspection approved, mortgage documents, you remove your subjects. At that time, you pay typically 5%, which is your deposit, and that portion makes up the down payment.
Okay.
Then the documents go to the lawyer, you sign, you move, welcome home.
Okay, it seems really easy when he says it. Now, I always have to put people on the spot. Do you practice what you preach? What was your first-time home buyer's experience like as a mortgage broker?
I practice what I preach now.
Okay, yeah. But tell me about that experience, about living it and coming from a professional aspect, too. Tell me about that.
So I bought my first home with my mom.
Okay.
Mommy.
Yeah.
Bought my first home, and I was actually living with a friend of mine. I'm not going to say his name. And he was a realtor, and I had to support the guy that I was living with. Well, he'd only done a few transactions. Yeah. And I guess trying to be supportive, royally botched the deal, and the contract was not written at all like it was supposed to. Didn't include things I specifically asked for.
Sure.
Cost me, my mom and I can't remember, $8,000 or $10,000 in additional stuff. It was just a disaster, and unfortunately, we have a tough time looking at each other now. So it even cost me one of my best friends.
Friendship.
So be cautious. Don't, just because you're.
We all know a realtor, right? We all know somebody who's in the business,
or
always
a couple
soliciting.
Of them.
Yeah.
So just be careful. Do your research.
You recently told me a story about you and your wife buying a place. Tell me what. Do you want to talk about that? Yeah.
You weren't supposed to bring that up.
Oh, yeah. There you go.
Wife and I bought a place.
It's my job. Yeah.
It is. Wife and I bought a place very recently, and it was a really nice townhouse, our dream home, above Granville Island, and. We figured it's a brand new home, reputable builder, paid way too much for it, and everything will be fine. So I figured, skip the inspection.
Wow.
Not a big deal, I'll do it myself.
Not advised, Yeah.
Well, I figured on a brand new property with this reputable builder, I wouldn't have that as a problem. Complete disaster, and it took them a year and a half before they stopped fixing the stuff that I noticed within the first a year and a half of them in and out of our house every couple of days.
Wow.
Brutal. And I'm not even talking about the structural errors in the walls that aren't straight. So moral of that story, get an inspection, even on new property. Obviously old property, but. So
with that, or what is the most important part of the first time home buying experience? What is the most important piece?
Yeah, that's a good question. This is what I like to be asked. The subject removal stage. It's that you basically have 5 business days. That's it.
Sure.
So if you are going to have any issues, documents, credit, whatever, you want to figure that out before you're into the subjects, whether you're buying an investment property or your 10th property, whatever. Get it out of the way.
Okay.
Because you've got 5 business days. If something goes wrong, you might lose the house. You won't have time.
Okay. Roughly, this is a stat, I'm going to read it. Roughly 40% of your income can be used towards your mortgage and overall debt. What's the most common thing to negatively affect credit? Because a lot of people, young people, are working on their credit, so I want to know, what is that?
Yeah, I'll get into credit in a bit, but the most common qualifying for a purchase, I'd like to bring that up. People, a lot of young couples, they get a new home, or they're about to get a new home. They get all excited. I now need a shiny car to go with my new shiny home.
Of course.
That's a bad idea.
Wow.
The problem is you get stuck with this payment, $2,000 to $1,500 a month, or whatever, how elaborate your car is, and that will squash your ability to qualify for a mortgage.
Wow.
So if you need to have the new shiny car, take possession of the house first, and then spend the car.
Okay. If someone is employed, why would they need to know the notice of assessment, and what is that exactly?
Yeah, I'm not going to bore you guys with document lingo, but notice of assessment is also referred to as an NOA. Now, this, whether you're employed or self-employed, you send in your documents to the government, and then they come back with this typically blue document, and they say, okay, we've reviewed your taxes, this is how much money you made last year.
Sure.
Well, if you can't find that document when the lender asks for it at subject removal, even when you're employed, because in the back in the day, they didn't ask for it that often. They do all the time now.
Yeah.
Well, it can take weeks to months to get that document sent to you. And the house is long gone by then.
Yeah.
So have both the last 2 years. If you don't mind, if we could save questions for the end.
Yeah, well, definitely.
That means you got to stay here for another few minutes. Sorry, we're going to stay for a bit. We're not going anywhere after, I promise. Yeah, notice of assessment, it's just such a key thing to have.
Okay.
Because there's a very good chance you might need it. So just please have it.
And other common misconceptions about credit score in this process?
Yeah, so credit, in all my years of doing this presentation, that's probably the number one key thing.
Okay.
Is for questions, I find. It's the most popular topic. So there's a lot of things on your credit misconceptions. For example, little things, like say you've got a $10,000 line of credit or credit card. A lot of people don't realize the second you go over about 50% of the limit, it affects your score. And the higher you get to your limit, the more your credit score goes down and down and down. If you ever go over, it will crush your score to the point that you will not be able to get an A mortgage, all the best rates. You're going to be paying 1 to 2% higher. Now the benefit of that, one good thing about that is you can pay it down. Within 30 to 60 days, your score will go back to wherever it was.
Sure.
And there's no record of it. Bills, when people get bills, everyone thinks, oh, I've got 30 days to pay the bill. You don't. You actually, I think, depending on institutions, about 21. I always tell people give it 1 week and then pay your bill. Sounds simple. However, if you miss one payment, that is on your credit bureau for 6 full years.
Wow.
6 full years. And lenders look at it. Your cell phone bill, a lot of people don't realize it, it's on your credit bureau now. So that's probably the most common thing people just don't bother, I'll pay it next month, not a big deal. It's now on your bureau. Okay. Lenders are watching.
So people, people will go online, go to Equifax. Some people are members of this. Do you do this yourself? Are you constantly checking your score, and would you recommend that?
Yeah, it's funny. Once you get signed up, you pay a fee of $12 a month or whatever it is, and you find yourself going all the time, what's my score? What's my score? You're just checking your score, and it's free. It doesn't cost anything to have that. The reason why I had a lot of value myself personally was someone tried to open a department store card, like the Bay or Sears, under my name. It was fraud.
Wow.
Yeah, and I got an email, because you get an email instantly when any changes happen on your bureau. So I get an email, I call them up and say, whoa, this is not me. Like, freeze this application. Sure. That could have taken years for me to get off.
Yeah.
I wouldn't have had to pay for it, but the point is it's going to affect my credit.
Okay, so people got bad credit. Young people, sometimes we've been credit cards early in our lives. How do we rebuild that credit to have this great credibility when we're going into this first-time homebuyer situation? Tell us about building credit.
Yeah, and don't get me wrong, I had shitty credit, if I'm allowed to say shitty. Probably. I had poor credit earlier on when I was younger. I went through all this. I get it. I mean, now my score is better. By the way, you want your credit score at 700. It starts at 3 and goes as high as 9. So you want it at 7 is your ideal number. So in order to build credit, there's a number of tricks and strategies you can do. Obviously, pay your bills on time. But you want to actually have 2 trade lines. Now, a trade line is a line of credit, credit card, car payment. I don't recommend it. It still counts. You want to have 2 at minimum $2,000 limit, preferably $2,500.
Sure.
That's the 2 biggest things, and without that, your credit could be negatively affected. It's very important to have. One point, I did a presentation yesterday, and there wasn't a single home buyer, not a single person had a mortgage in the entire crowd except my mom. So that was interesting doing a first home buyer seminar.
Sure.
But there was a question about credit, and we have a lot of clients that are retired, and they'll come to us, we want to buy another property, downgrade, upgrade, whatever. Our credit's fantastic. We don't have a single credit card. You have no score. So without a score, you can't do anything.
That's right.
Anything.
Okay, talk about this term. It's a Jessi term, true qualification. What does that mean?
Okay, that is such a such a key, important. I missed that slide. Such a key, important thing that I like to focus on. So, the most important thing when you're buying your first home is to not be over leveraged.
Yeah.
And we're going to get into that in a little bit. But when you go to a typical broker or a bank, they're going to basically give you what's called like a maximum qualification.
Yeah.
They take your income, your liabilities, and your down payment or credit, and they say you can spend $500,000. Go. And that's what most people do.
That's right.
So what we do instead is, fine, we'll give you that number. I do not recommend you take it. We'll give you that number, but instead we'll ask you and say, okay, Sharad, how much can you afford per month? And you say, oh, I can do $2,000 a month.
Sure.
Okay. So, although I'm sure you can afford a lot more.
Oh, well, thank you. Yeah.
You go. We basically take the entire process and go backwards. It takes us a little while, but this establishes a true qualification for what you have.
Sure.
Because in your scenario, you might have other business ambitions, financial goals, maybe some outside debt. When I started my business, I owed my mom money for a bit.
Yeah.
And that I still have to count in my budget.
Sure.
So this whole true qualification is based on you telling me what you can afford per month, and then I'll come back and say, well, your true qualification is $400,000 versus $500,000. That is your maximum. Stick with that, and don't over leverage yourself.
Okay. Payment shock. People go through this. Can you explain to everyone what this is and how to understand this?
Well, today's rate, I don't know, 279 or whatever you can get, 269. I don't know, it's so low right now. The odds of that being the rate you're going to get in 5 years is pretty slim, maybe, but slim. So what happens is when your payment goes to 4, 5, 6, 7%.
Sure.
The rate, your payment goes up substantially.
Okay.
And this is a shock to you, shock to your budget.
Yeah.
So what I recommend to people is when you're doing your qualification, don't over leverage yourself, but at the same time, ensure you've got a good understanding. We show all of our clients this. What is your payment going to be?
Yeah.
What if it goes to 3, 4%?
That's right.
Funny concept. And then understand, because you can afford it now doesn't mean you can afford it in 5 years.
Okay, so you're building a credit score. You're building this ideal that you want to make sure that you can afford things. Who do you need on this big team of yours to advise you? This proverbial team to get you where you want, to get you that first house. Who do you put in your sandbox?
Well, I mean, you definitely need your broker.
There you go. Okay.
You need a broker, realtor, definitely. But there's a few other key points that people don't research enough.
Yeah.
So you've got mortgage insurance. A lot of people don't,
Yeah.
and I'm not to be confused with CMHC or Genworth. Mortgage insurance that's going to cover you for disability.
Sure.
Or critical illness.
Okay.
Or death. These things we'll cover in a little bit, but it's very important. So people don't budget the extra $100 or whatever it's going to cost to cover that.
Okay.
So we have someone at a booth we recommend.
Notaries versus lawyers. Tell me about that.
Yeah, and that'd be the next, the fourth essential team member, so to speak. There's a false stigma that notaries are cheaper than lawyers. It's not true. The most expensive transaction I've ever seen was from a notary.
Okay.
But where you will save money with notaries is you might have a one individual person who is the notary. They're also the janitor, the admin, the bookkeeper.
Yeah.
It's a one-person shop. Fine, you might shave off $50, maybe $100 off the price. The problem with that, though, is if they're trying to do too many things and they don't focus on real estate enough, they don't have enough clients. That's why they're shaving money off, because they don't have enough clients. That's not a good thing for you. At the same time, it can be very expensive because, let's say your lender you choose they're not approved, that whoever that person is not approved. Now you have to hire a second one, and your lawyer fees can be as high as $2,500 to $3,000 is the highest I've seen. So I recommend Tony Spagnuolo.
Okay.
He's amazing. Fantastic.
Let's talk lender insurance. Why is that bad? Or good, for that matter, yeah.
Yeah, no. Okay, so we always like to recommend all of our clients have critical illness and disability. More important than life.
Yeah.
Because you never know. We don't have a crystal ball. If I did, I'd be in a better place. But
sure. Yeah.
Be able to predict these rates. Lender insurance, the problem with lender mortgage insurance, is it's with that lender. Well, the odds of you being with the same lender for the entire life of the mortgage these days is very slim.
Okay.
Typically, you should have no problem when your mortgage is up for renewal to negotiate with other lenders.
Okay.
I'll come over to you, fine. But you got to give me a rate that's 0.2 better than now.
Okay.
It's going to save you 2, 3, 4, 5 grand. Well, in 5 years, I guarantee you're 5 years older.
Yeah.
And the chances of having diabetes, cancer, or heart
Sure.
attack, whatever, that will leave you either insurable or you have your premiums through the roof. Never take lender insurance, ever, ever, ever.
Okay, so let's bring it back to you. What differentiates you from other mortgage brokers?
We do a bit of a unique situation where we try to provide a mortgage management system instead. So as I was saying earlier, getting a rate, great product, is really not that hard majority of the time. So we like to provide an additional mortgage management system where every year our clients, we get them on the phone just for a few minutes, ask them basic questions, and we send them a report. That shows their payment shock. That shows, if we can restructure, lower their rate on any of their properties,
of course, yeah.
Free up cash flow. So whether you're using me or not, it doesn't really matter. Just, make sure your broker's going over this stuff because it is important. We provide more of like a product you get from like a financial advisor.
Yeah.
Who's very experienced. We try to bring that into the mortgage industry.
Okay. I remember buying my first place, people would be like, you can get a place 0 down and you can just start making your payments. Do you recommend that? And do they still exist? Like, tell me about that.
0 down, okay. It was
it was there, yeah.
Yeah, it was there for a while where there was a time, pre-recession,
sure,
where 0 down, yes, you could actually do quite well with that. Now, what happened is after the recession, they actually abolished it. They said, no more 0 down. Can't do this anymore. So the banks got creative, as they always do, and they found a way that, okay, say you want to buy a $500,000 property, they found a way that they will give you the 5%, but I've run the numbers. To get that 5%, you pay 100% on the investment.
Oh, wow.
It's insane. Like, that's actually technically illegal.
Tricky. That's tricky.
Yeah, so what they do is they increase the rate on the main mortgage, and that's how they get you. So obviously that's a terrible idea.
Okay, what do you do if somebody doesn't have a down payment, or a full down payment? What's your recommendation on that?
So, for first-home buyers, you usually have a recently married couple, I guess, is probably the most common. So you have a recently married couple, you got 2 people. So what we recommend, you have to have a reasonable credit score for this, but you go get a line of credit. Each person get an unsecured line of credit for $10,000. Take the money out of the line of credit, put it into preferably a high-interest savings account.
Sure.
The trick here is that within 3 months, that's yours. You can actually use that legally for down payment.
Yeah.
The downside is you're paying interest on it.
Yeah.
And because you do max out the trade, as I mentioned earlier, now your credit score is going to drop. So you want to start chipping away at that as best you can.
Okay, a lot of younger people depend on our parents, family, for gift amounts. Can you talk a bit about gift amounts when you transfer money over? Yeah.
Yeah, this is something I've never had the pleasure of receiving.
I'm waiting for it. Maybe I can. Maybe.
We can use gifted down payment. Now, in the past, you would just get money from mom, dad, grandma, whatever, and it was great. Now they want to see a full record for 90-day history of actually where that came from.
Okay.
Whether it's India or China or whatnot.
Yeah.
And they have people that can obviously translate the documents if need be. They want to see a full record, and it's basically anti-money laundering is what they're doing.
Of course.
So.
Okay, maximum amortization these days. What's going on with that?
Yeah, a lot has changed over the years for our mortgage industry. The maximum amortization, if you have less than 20%, is 25 years.
Wow.
And you go back a few years, we could have got, years ago, we could have gotten 40%. Sorry, 40 years. Now, if you have 20% down, we can actually go as high as a 35-year amortization.
Okay, closing costs. We always talk about the big costs moving in, our payment. I'm so payment driven in this country. Everybody's just like, what's our final amount? What are the closing costs? What are things that we don't know about that might come up?
Okay. So you basically, whatever your purchase price is, estimate 1.5% of that number is what the lenders want to see you have in a bank account. And this is supposed to be from your own funds, and it has to be funds that are available so you have the capacity to complete the mortgage or the purchase. Now the thing is, you don't actually necessarily have to use it. It just has to be there. So a quick breakdown of closing costs: your appraisal $250, inspection $400. Legal, I suggest estimating $1,200 to about $1,500.
Yep.
I'm free. Your realtor's free. I mean, there's mortgage insurance, but that's not an upfront cost. If you purchase over $500,000, which we're going to get into that in a sec, then you have to pay full property transfer tax. And that's going to be your most expensive closing cost, which you cannot add that on the mortgage. You have to have it in cash.
Okay. I'm self-employed. A lot of self-employed people out there. Sometimes you have to explain creatively what you do, how much money you make. That's a whole new ball game. Tell me about that.
Question again.
About me being self-employed. I want to know more about that, yeah. Oh. Creative jobs out there, yeah.
You sound like you're on.
I'm on. Are you on?
I don't know. Can you guys hear me now?
Can you hear now? Yeah. Okay, super. So self-employed. Tell me about, thank you. No worries, yeah.
Self-employed.
Yes.
Okay, so for self-employed applicants, it's a bit of a different scenario where people in the past that were really good with their taxes, now it's a different story. Based on the new mortgage rules, you have to have 35% down, which is a lot. It's a lot of money. So this NOA, Notice of Assessment, say you make $100,000 and you write it off down to 20. In the past, we used to be able to state your income and say, oh, he or she actually made 80 or 90 grand, and I could use that number. That is a thing of the past.
Yeah.
So now we have to use whatever's on your Notice of Assessment plus 15%. So if you're claiming 20 grand at the end of the day because you're good at your taxes, you're going to qualify for a closet.
Yeah. Which actually is some of the situations these days, a closet size. Okay, co-signer versus guarantor, the pros and cons of that, and how does that work?
Yeah, I'd actually like to talk about the co-signer and guarantor from the perspective of someone actually co-signing and guaranteeing. The big difference here is if you're guaranteeing a mortgage, it basically means you're off title. But if you're guaranteeing someone's mortgage, you kind of might want to be untitled. Otherwise, you have a liability with no actual asset value,
that's right.
which is a bit of an issue.
Yep.
Whereas when you do co-sign for the property, you are untitled.
Yep.
So it does have the pros and cons to both. Now, the downside of being on title of too many of these properties is the more you have your name on title, the harder it is to qualify for new mortgages.
Oh, that's very interesting. So you can't, okay. I'm not going to put you on the spot, but I'm going to put you on the spot. What is your view on interest rates right now? Where are they going? Crystal ball, give us a big picture on what you think.
Okay, so I'm not a senior economist working for CIBC, but I do watch their emails and reports daily.
Okay.
As you know, the the Bank of Canada overnight rate, it came down recently, and it's actually supposed to come down again.
Wow.
Which means we're going to have interest rates in the 1% range, which is just unreal. It's not supposed to happen next month.
Okay.
Does anybody here have a variable or line of credit? 1?
Yeah.
2, 3, 4, 5?
Yeah.
You could be, well, we all could be in a very happy place in about a month. It's expected to go down at least another quarter point.
Wow.
And that's until oil is going to come back up.
Okay. What are the 3 tiers of mortgage rates? Tell me about that.
Okay, so there's 3 main tiers with mortgages. And I think this is very important information because a lot of people, they go online and they see these rock bottom interest rates that are 2.55 for 5 years.
That's right. Yeah.
Well, okay, that's not in your best interest though. So you have your first tier, and first not being the best.
Yeah.
Your first tier rate is these ultra low rate shopper rates that they have no back end. You can't look at your balance. It's hard to do prepayments. Most of them don't even have prepayments, or they're very limited. The penalties to get rid of these mortgages are just insane. They're just very, very, very restricted products. Yeah. But it might save you $5 a month. Okay. Some people really want that.
Okay.
Tier 2 is probably what we recommend as the most popular. Those are like the broker channel kind of lenders, the wholesale lenders, full prepayment options, great rates. I think they're the best.
Okay.
Tier 3 is your banks. That'll be your banks, your TDs, your Scotias, where the penalties are on average for fixed products about 3 times higher.
Okay.
They force you into these collateral mortgages, which we can get into if you want. The back ends are great. So if you want to check your mortgage balance every single day, okay, you can. But I recommend Tier 2.
Okay, restricted mortgage rates. Tell us more about that.
Restricted products are not always just, the rate itself is a little bit lower.
Okay.
Not always though, because you got the banks that are restricted as well.
Yeah.
Restricted just means your prepayment options are less.
Sure.
You can't get rid of it nearly as fast. You can't break the mortgage a lot of the times. Might not be portable. It might be a collateral mortgage. A collateral mortgage is something you only need if you're getting a line of credit. The problem is a lot of these banks have this policy where they stick you on a line of credit even on a fixed product.
That's right.
Or variable. You don't need, sorry, I meant collateral mortgage.
Sure.
You don't need that. The problem is at renewal, when you want to move from one lender to another to save a couple grand, now you got to pay $1,500 to break it.
Cancellation fees.
Yeah.
IRD, interest rate differential. Why does this suck? Tell me about that.
The IRD is this new thing the banks creatively came up with years ago, not that long ago, where your fixed rates in the past, if you broke it, it was a 3-month interest penalty.
Yeah.
Well, now these things are like $30,000, $40,000, $50,000.
Wow.
They basically want to make sure every penny you would have paid them in interest, they will get back.
Okay.
And then the banks usually times that by about three times that if you're with a big bank.
Okay, so whenever I've seen my banker about a mortgage renewing, the words fixed and variable are like sticking out, like, you know, right out there, like sore thumbs sometimes. This is a constant debate. Tell me what your thoughts are on what's better, what's worse. Tell me.
That's probably one of the more common questions I think we're asked, and it is the great debate. What's better? Historically speaking, and I'm talking 30 years, the variable has been the better way to go.
Okay.
Over the past year, it's been fixed because if you're going to go variable, roll the dice, take the risk.
Yeah.
There, you want to make sure you've got a spread of about 0.8 to 1%.
Yeah.
Up until recently, we have not had that.
That's right.
So I've been saying fixed, fixed, fixed.
Yeah.
Now, the variable is low. You're just above 2%, and it's probably going to go down again.
Yeah.
So I'm suggesting variable. It is a lot harder to qualify for, though.
Okay. So whenever I've seen, a mortgage broker, we talk about rate holds. Tell me about the rate hold. How long does it last? What is it? Yeah.
Yeah, the rate hold is something you get for free. You just have to ask for it, and it should be offered to you when you're buying your first home. And this is what protects you. So whether you're refinancing, renewing, or purchasing, it's free. It basically just locks in a variable, which will be prime minus whatever these days, or a fixed product, and it gives you 4 months to figure out whatever you're going to do.
4 months, okay. Convertible variable mortgage. Sounds really cool. What is it? Yeah.
So if you're going to get a variable, make sure you get the one that's convertible. And what that basically means is at any point in time during the 5-year variable or 3-year variable, whatever you choose, you have the option to say, I want to go fixed. I'm having trouble sleeping at night.
Okay.
It's freaking me out. You can just call your lender and then you get a fixed rate.
What's a frozen variable payment?
Frozen variable is where you have the opportunity, if you want to, you can freeze your payment. So say you have 2.15%.
Yeah.
You have 2.15% on your mortgage, but you can set your payment at 3%. And then if the variable goes up or down, you just end up paying more or less interest. So you can fix your budget, especially for revenue properties or investment properties. This is key because you've got a fixed level of income.
Okay, so we're at the home show, as everyone is here right now. Purchase Plus Improvements Program. How does that work, and how does that help? Yeah. Yeah,
very relevant, I guess, to the show.
Yeah.
It's not as popular of a product as you would think. But what you're allowed to do is you can buy a home. I think you can do as little as 5% down. It's 5 or 10.
Yeah.
You buy a home, and you have the ability to go to a contractor and say you're allowed to spend up to $40,000 or 20%.
Wow.
Which is, that's a whole new kitchen, bathroom.
Sure.
Do pretty well with that. If you want to go more, it's just based on management approval. But the point is you can come in and do instant renos. The contractor doesn't need to be paid for 30 days after completion anyways. And then what you do is you send all the work in with an appraiser when it's done, and the bank will cut you a check for that amount and just add it on your mortgage at the ultra low rate. Very, very cool.
Okay. I've never heard of that.
Yeah,
and,
it's not popular. I don't know why.
That's very cool. You guys are here. You have some booths here. There's a cashback offer with Dominion. Can you talk about that offer as we're all here at the show as well? Yeah. Yeah, so we have this unique program we signed up with a few months back. And what they do is if you're buying or selling your home, more importantly buying, because you don't normally get this,
we have a company that will actually give you up to $7,000 back. And I say 7 because that's the current record. That's the most someone got back. On the low end, it's 2,000. Typically, it's about 3,500.
Okay.
$4,000. It's based on the size of the property you're buying.
Okay.
But we literally get a check in your hand, and you still get the same rates. You just have to use one of their realtors. But I've negotiated a step further, and now they're using my realtors. So people I know, I trust, I work with all the time.
And you're going to be at the booths today talking to people?
Right over there. Big Dominion booth.
Okay, so make sure you do check that out. Ask more questions because we will have a Q&A after this as well. A lot of people have savings. RSPs. Can you talk about property tax savings and the tax credit of this stuff? Like, how does that work?
Yeah, so there's benefits of a first home buyer.
Yeah.
Benefits of a first home buyer. Very good to know. You have three major benefits. So property transfer tax. If you're buying below, and it's just changed, buying below $475, you don't pay. You simply do not pay. That's a lot of money. 1% on the first, 2% on the remainder.
That's right.
Now, if you buy between $475 and $500, there's a discount.
Yeah.
But over $500, even as a first-home buyer, you have to pay the full amount. Okay. That's a lot of money, which is kind of funny because the average home in Vancouver is $1 million, but they've set it at $5 million. So. Anyway.
Is that really what it is? Is $1 million in Vancouver?
Over $1 million, yeah.
It is over $1 million for sure.
Well, two other points, sorry.
Yeah, please.
You also have a new, well, it's not that new, it's been around for a few years, a tax credit.
Sure.
You can actually write off $5,000 as, it's almost like a business expense write-off, comes off your income, and you put $750 back. Just tell your accountant on the next year we're doing your taxes. That just pays your legal right there. Well, I mean the actual fee, not the extra stuff.
Amazing.
Yeah, that's pretty cool. There's one more. What I covered: property tax, RRSPs. You're allowed to use up to $25,000 of your RRSPs per person.
Okay.
So I think I've seen 3 or 4 people as the record using all of their RRSPs. You don't have to pay it back for 15 years. Here's the kicker: you can't pull the money out in December and January. It has to be in the same calendar year.
Have you used RRSPs to buy your first home?
This is mistake number 3, Jessi Johnson.
Jessi Johnson.
The mortgage broker making mistakes on his own purchase. So this one, in my defense, was not my fault.
Okay.
Yes, I was the victim. So I went to my financial advisor, I will not name the company, and told this individual I had my 14 grand or whatever it was, my whopping savings, and I want to buy my first home. I need the RSPs. I need it out by this day. Okay. So he does. He takes it out, but he didn't do it properly.
Okay.
So now I talk to financial advisors if I've given the opportunity to make sure they don't do this. He took it out and added on my income. Well, I was on year 3 of a broker. I had no corporation, so I had some coin that it was going to have to pay tax on. It put me in a different tax bracket and cost me $4,000. $4,000 just to take it out. So when you're using your RRSPs, make sure the person you're dealing with knows what they're doing and they pull it out properly. Otherwise, it can be very expensive. It might have been $7,000. I can't remember. It was a lot of money.
Okay, so you buy a house, you get through all this stuff, you have this mortgage. Now, how do you get rid of this mortgage?
To be mortgage-free.
Yeah, mortgage-free. There you go. Tell me about that.
So first off, don't take a restricted product.
Okay, no restricted product.
It's very hard to be mortgage-free with a restricted product. Everybody knows lump sum payments. You can do balloon payments. You can dump money. You got an extra couple grand, and your mortgage, you plant it on the mortgage balance. Now, okay, that's great. You can, with the standard lender, pay up to 20% of the original mortgage each year.
Sure.
Which essentially allows you to pay off your mortgage in less than 5 years without any penalty.
Okay.
I've yet to see someone do it, but it's possible.
Okay.
Now, let's say you don't do any of that.
Yeah.
If you're not over-leveraged, if you increase your payment by 20%, which is really not that much, as long as you're okay with your spending.
Sure. Yeah.
And simply use an accelerated biweekly, it'll cut your mortgage in half. In half.
Wow.
You just have to increase it. 20%.
I feel like taking you everywhere, Jessi Johnson. In my
calm down.
Before I'm gonna allow the audience to ask questions shortly, but there were some questions that were asked on your website. Can you talk about those, and then we'll open it up to the audience here? Yeah.
Yeah, it's funny, actually. I reviewed all the recent questions. I went back over all the emails we've been getting over the past month, and they're actually all covered today already.
They are?
Yeah, they are. Yeah.
Beautiful. Okay, so let's open it up to the audience here. I believe we have someone with a microphone can come around and ask some questions. So please raise your hand, and we'll entertain the crowd here a little bit on some first-time home buying or any of the
we had a
questions.
few.
Yeah. Do we have some questions out here? Put up your hand. Anyone? Any comments? Right here. Oh yes, she's got,
scanning the emails.
She's
That's
going
awesome.
on there right now. Great. Yeah.
What's a notice of assessment?
I'm sorry, I can't.
Notice of assessment. What is a notice of assessment?
How do you get that?
Yeah, so when you file your taxes, if you're self-employed, you send your T1 generals. If you're employed, you send in your T4s, or if you're commissioned, it's T4As. You or your accountant sends it into the government, and after they do your taxes, you get this document mailed back to you. And if you say you can't find it, and it's a very common thing to get lost.
Yeah, I lose it every day.
Yeah, it's very common. Yeah. When you can call CRA and request a new one to be sent.
That's right.
It takes forever. It takes so long, and a lot of lenders don't let you use your CRA account print off.
Yeah.
They think, oh, I can just log into my account. They won't. I don't know why. They don't let you do it half the time.
Wow.
Yep.
Yeah, please.
So, so I do my taxes, and I always get, I get like a two-piece, like a folded piece of paper that, and it will include on there my RSP information, like how much I can contribute every year. That's the notice of assessment. Does it say on the top notice of assessment?
That's it.
I keep everything.
It'll say notice of assessment for sure.
Yeah, it'll say it. Yeah, it'll say it across the top. But you are right, though. That is it.
Yeah.
Yeah.
Any other comments or questions? Oh, yes, right here, please, yeah.
If we could turn that mic up a little bit, too. It's really hard to hear the questions.
You mentioned for self-employed people that the down payment minimum was 35%. Can you elaborate on that a bit?
Yeah, that's a really good question, because it used to be as low as 5%.
Wow.
So if you're self-employed and your notice of assessments have enough income to do what you're looking for, and the majority of the time they don't these days, especially in Vancouver, you have to state your income. So you might say, I made 100,000 and I wrote it off down to say 30. In order to state your income these days, you actually have to have 35%, or you can do creative private lending, where you're going to be paying a little bit higher of a rate.
Yep.
A lot bit higher of a rate.
Yep.
But the amount of money you're saving on your taxes by having these write-offs far exceeds paying an extra few percent on a private mortgage. So with creativity, you need about 20% down, unless your notice of assessments on a 2-year average have enough with an increase of 15% to cover the loan. 1/3 of our clients are self-employed. Most on the NOAs don't qualify for what they're looking to do these days.
Yes, please.
So what if you're both? What if you're both self-employed and you have an employer, which I have?
You can. That's a good question. You can use the the employment income. If that's enough, great. If it's not, they're just going to look at your notice of assessments.
Okay.
The problem with your notice of assessments is that's after all your taxes and everything. That's what you have left over. Whereas an employment letter, that's pre-tax.
Okay.
So you can actually get to use more.
Yeah.
Which is why they let you gross up by 15%. So.
You mentioned the name of a lawyer. Can you repeat the name?
Yes.
Just
please don't ask me to spell it.
Yeah.
It's Tony.
I can spell it.
You can spell it?
I can.
Oh, you're a rock star.
Yeah, it's SPAG.
NU.
NUOLO, I think.
Yeah.
Yes.
Okay.
I used to work for a lawyer.
And he is great.
That's awesome.
Yeah.
SPAGNUOLO.
I think if you type in Google Tony Spags, it actually comes up.
Any other comments, questions?
Yep.
Another one. Yeah,
you
please.
Come sit up here.
Yeah, you should come and join us up here.
I'm regretting that I came in halfway now. How can I hire you?
Well, that's a good segue to our finale here. How do people find you and today and in the future? Yeah.
Okay, so I'm here all day. So you can come.
He's living here.
Come hang out at the booth.
Yeah.
I'm just over here. So if you want to go to firsthomeinfo.ca, and I have an in-depth presentation with all the data of buying your first home, and you can download it. It's free. As well as jessijohnson.ca. I'm pretty easy to find. Google.
Yeah, Google. I mean, I've experienced a lot of people that give me information, partial information, somewhat misleading information. Jessi is not only competent in what he does, but he's accessible and he's current. And that's why I choose people like Jessi to be a part of my team, and he's available. So, ladies and gentlemen, Jessi Johnson. Yeah, thank you.
Yeah, and special thanks to Sharad.
My pleasure.
He's a rock star, and he's really helping me out. And I want to take the time to thank Bethany for putting up with me, and Tyson and Stephanie and Justine and the whole crew for letting me
great experience.
Chat.
Yeah.
Thank you guys for coming. I appreciate you.
Thank you. Go buy a house.
Yeah.
Yes.
Thank you very much,
Thank you very
Jessi and
much. I
Sharad.
appreciate that.
And in 10 minutes here on the main stage, we will have